Wow, what a crazy and event-filled year this has been, and we're only half the way through. So let's take a look at the real estate market and try and make sense of it. Hi, I'm Gordon Baker with RE/MAX Alliance Group, and let's jump right into the facts regarding the Phoenix area real estate market. First and foremost, homes for sale or listings are down. Now, has this affected all price ranges equally? Let's take a look. The biggest reduction has been in those homes priced under $300,000 or the most affordable. A 48% drop since the first of the year. And the home availability in other price ranges have also seen significant drops, including luxury listings. Now, we'll take a look at the COVID-related effects later on, but since we're talking about available listings, I wanted to briefly take a look at the trend and breakdown of distressed sales. Right now, bank-owned homes, short sales, and HUD properties are in decline and have been for years. With this reduction in available homes for sale, what keeps buyers in the game? Well, the answer is interest rates, and leasing rates have gone up. To understand just how important interest rates are, let's look at the payment on a $300,000 purchase with 10% down at a 5% interest rate. The monthly mortgage payment would be $1,449. At the same time, the same purchase amount and percentage down payment, but at 3.25%, the monthly payment falls to $1,175, a 19% savings. Now, let's say that you were comfortable with the $1,449 payment. Taking advantage of that lower interest rate, 3.25%, you could buy a $370,000 house. In other words, that 1.75% drop in interest rates increased your purchasing power by 23%. Another motivation that I've mentioned before is the cost of leasing has gone up, making buyers opt towards purchasing. How else do we know that buyers are still interested and active in the market? Listings under contract. Right now, during the pandemic, the listings under contract are higher than they were last year and the year before. I know your next question is going to be, so where do we stand on prices during the first half of the year? So let's take a look at some of the major cities in the Phoenix area. Here are graphs of 9 of the cities in the Phoenix area. These graphs show stable trends since the first of the year and even during the pandemic. So what does the future hold? The short-term effect has been very minor, so we have to look to the medium and long-term effects. The mortgage delinquency rate was at its lowest point since 1979 at the end of 2019. Now it increased in the first quarter. So at the end of March, it was at 3.39%, and then in April, it rose to 6.45%, and recently to 7.76% in May. And I think the delinquency rate is the metric to focus on as far as what's to come. Now, the CARES Act was passed to mitigate the effects of these delinquencies and provide forbearance options to homeowners. Now, the effect on the real estate in the medium to longer term will depend on, obviously, the unemployment rate. And repayment and deferment options after the COVID-19 moratoriums are lifted, and that driving force interest rates. Homeowners will probably also have the ability to avoid foreclosure because the year-over-year appreciation in Arizona has been very robust since 2011, and right now there is a very healthy appetite for home ownership. Okay, in summary, we have a strong seller's market because of low supply. Buyers, on the other hand, are being motivated by what are historic all-time low interest rates resulting in high demand. Now, COVID-19 has had a minor impact so far, and longer-term effects will be determined by the economy's ability to reduce unemployment and lenders working through loan delinquencies caused by job losses. Now, I hope this has been helpful for you to understand what has happened in the first half of this year, 2020, in the Phoenix real estate market. And if you feel so inclined, like the video and want to be notified of future real estate updates, please subscribe. Again, my name is Gordon Baker with RE/MAX Alliance Group, 480-326-8571. Thank you. And buyers are motivated by what are historically low all-time interest rates, that's not right, okay, let's get it right, are motivated by what are, did I get that right? And buyers are being motivated by what are really historically low all-time interest rates. That doesn't sound right.